Welcome back to Crypto Bootcamp, Level 1. In this video, we're going to answer a question almost everyone has. Why do crypto prices move so much? You'll see big green candles, big red candles, and people saying things like, "The market is crazy today." By the end of this lesson, you'll understand how supply and demand move prices in plain English, how narratives and emotions like hype and fear affect those moves, and why volatility equals risk, especially for beginners. The goal is to make volatility feel less like magic and more like something you can calmly understand. As always, this is education, not financial advice. I'm not telling you to buy, sell, or trade anything. We're just learning how prices behave, so you can think more clearly if you ever decide to get involved. Supply and demand. Let's start with the most basic idea. Prices move because of supply and demand. You can think of it like a simple tug of war. When more people want to buy than sell at current prices, buyers have to offer higher prices to get someone to sell, so the price tends to go up. When more people want to sell than buy at current prices, sellers have to accept lower prices to find a buyer, so the price tends to go down. That's true for crypto, stocks, houses, even concert tickets. The difference with crypto is it's traded 24/7. It's still relatively young, and a lot of people are there mainly to speculate. So when something changes, a piece of news, a new story, a rumor, buying and selling decisions can flip very quickly. The key idea: crypto prices move a lot because supply and demand can shift fast in a global, always open market. Next, let's talk about narratives and emotions: news, hype, fear. If supply and demand are the engine, then narratives and emotions are the fuel. People don't buy or sell in a vacuum. They react to news, stories, social media, and their own emotions. Let's look at a few examples. Example 1. Positive story, up move. If there's a story that sounds positive, like a big company exploring crypto or a government sounding friendly toward it, some people might think, this could be good for the future. I should buy before it goes higher. More buyers show up. Some sellers raise their asking price. Demand goes up, price can move up. Example 2. Negative story, down move. If there's scary news, like potential bans, hacks, or scary headlines about crackdowns, people might think, this could be bad. I don't want to be the last one out. More sellers show up. They may accept lower prices just to get out quickly. Supply jumps, price can move down. Example 3. Hype plus fear of missing out, FOMO. Sometimes a coin starts going up quickly, and that move itself becomes a story. People see screenshots of gains, they hear this is the next big thing, they think, if I don't buy now, I'll miss out. That fear of missing out, FOMO, creates a wave of new buyers. But if the story flips, the same people can rush to sell. So it's not just math moving prices, it's a mix of logic, like this seems valuable, stories, like everyone is using this now, and emotion, like I'm excited or I'm scared. Crypto is still young, so stories and emotions can move prices a lot in a short amount of time. Next, let's talk about why volatility equals risk, especially for beginners. All of these fast moves lead to something you'll hear a lot: volatility. Volatility is a fancy word for how much and how quickly the price moves around. Big, frequent swings equal high volatility. Small, gentle moves equal low volatility. So why does this matter for beginners? Because volatility is risk in a few ways. 1. Emotional risk. When prices move quickly, big drops can trigger panic. Big jumps can trigger FOMO. It's very easy to buy because everyone is excited, then sell in fear when it drops, and repeat the cycle. Volatility can pull people into emotional, fast decisions, which is dangerous if you don't fully understand what you're doing. 2. Money risk. If you put in money that you can't afford to lose, a sudden price drop can affect your rent, your bills, your savings, not just your fun money. Volatility means your balance can change a lot in a short time. If that money was important for your everyday life, those swings can be painful. 3. Timing risk. Volatility also makes timing risky. If you buy during a hype moment, you might be buying after a big move up. If you panic sell after a crash, you might be selling after a big move down. The more a price jumps around, the easier it is to make decisions that feel right in the moment but look bad when you zoom out. Next, let's talk about a healthier way to think about volatility. So, as a beginner, what should you do with this information? A few healthy ideas. 1. Don't confuse volatility with opportunity. Big moves aren't always good or bad. They're just signs that prices are unstable. Volatility means opportunity, but it also means risk of big losses, especially if you don't fully understand what you're doing. 2. Respect volatility. Don't worship it. If you ever choose to get involved, remember, volatile assets can go up fast, but they can also go down fast. Just because something can move quickly doesn't mean you have to chase it. 3. It's okay to learn before risking real money. You don't have to take advantage of volatility just because it exists. It's completely okay to spend weeks or months learning what crypto is, how wallets work, how security works, before you decide whether you're comfortable with the level of volatility. One-sentence summary. Let's put it in one sentence. Crypto prices move a lot because supply and demand can change quickly in a global, always-open market, driven by stories and emotions, and that volatility is a form of risk that beginners should treat with respect, not excitement. If you can explain that in your own words, you understand volatility better than many people actively trading. In the next Level 1 video, we'll talk about what actually gives crypto value, not just price, but things like utility, adoption, and why some projects gain trust while others don't. This will help you separate what something costs today from why anyone might care about it long term. If this helped volatility feel a little less mysterious, hit subscribe to keep going with Level 1. And if you haven't watched the earlier lessons yet, start from the beginning so you have a solid foundation. If you're comfortable sharing, drop a comment. Volatility makes more sense now. Thanks for watching, and I'll see you in the next lesson.